Hello, today is Sunday, 4th day of August, 2013. Welcome to today's silver video, starting off with a very large written number, 12,298. Why is this number important, at least for today? Well, 12,298 days ago, on December the 3rd, 1979, the LBMA silver price closed at a record high of $19.88. So for close to 13,000 days, the price has remained relatively unchanged. Considering the price of silver when this whole fiat game started, or a whole economic model of paper currency started, silver was $1.29 per ounce. That's about 16, 17 times higher. Ask yourself, today, has the value of currency versus the value of silver meant that currency has only lost 17 times its value? Interesting question. The answer to me, myself, is very simple. Prices are still way oversold. For back in 1979, if I'm trying to guess what the fair market price was, well, it got up to 50, yes, maybe that was a little too high. But yeah, maybe 20 was fair price back then. So is 20 fair today? Oh, hell no. At least that's my personal opinion. You make your own. That's what it's all about. Let's look at the chart. We're going to look at the daily chart, the 7-hour chart going just from the bottom, the weekly chart, but I want to focus mainly on the monthly chart. Don't want to go over too much here. First off, you got this trend line, you got this trend line, however you want to draw it in there. But it's, let's draw two trend lines in. Yeah, there we go. So you got a couple of trend lines, you got a downtrend line. They're both in play, symmetrical triangle. Also, we have an outside day, and a pretty decent outside day in that. An outside day is when you make a high higher than the previous period high, and the low lower than the previous one as well, and it closed in the middle of it, or at the 18 average of closes within a sideways movement. This tells me a big move is most likely brewing, but almost impossible to tell which direction that it's going to go with so many conflicting results. The low, as I stated, it's important to stay above it. It was 1/10 of a penny, technically higher than this low with the data site that I use of NetData, and the high, which was the levels that closed the previous week. Not much more to say. You break above, key resistance is here. If you really can't hold this low 19 levels and you stay below 1934 many hours, we're probably going to at least test the previous low of 1821. That's all I need to say about the daily chart. But let's take a look at everything since this bottom of 1821. We'll use the 7-hour time frame to do such, and it's a choppy chart to say the least. First thing, the upper band in a sideways consolidation. This lower band, which was starting to rise higher, you have a situation where you have this going sideways, this going up. This is trying to make a bull market, but this remained sideways, this went in a downtrend. So overall, very much choppy, going above and below the 18 average of closes, and having multiple periods where it goes up and then down fast, or vice versa. There's a fast up move, down fast. There's your fast up move, you have some choppy sideways, down. And that's pretty much been the story. You have this break in here, and then you have a full week of a downtrend bar, which of course ended with this period here. Now this move, which from the low 1900s to the low 20s, that's about a $5 move. That happened within 1 hour, so that was fast moves, which is very common within the silver market. I don't want to go over too much on this chart because there's really not much to go over, as there's not much to go over on the weekly chart as well. The week last week was down 0.5% after a gain 2.5% the week before. down below, within this 18 average, a declining average, bear market, of course, but for the first time, and it doesn't say much, 2 consecutive weeks where the highest level was at the 18 average of lows, resisting it. Okay. Still, you can't tell on this if, oh, this is the resistance, thus the little failed move, and it's going to come down here, at least test the low and make it down to 17, 16, maybe. I don't know just by looking at this, but I do know for this to get bullish, this thing has to go at least flatten out, has to get above the 18 average, doing something like this. But if it breaks above it, when it goes back to the newly rising 18 average, it can't do what it did here. That, of course, is sell off. Again, not much I want to go over on the weekly chart. I want to go over more on the monthly chart, actually. So let's bring it up. Okay, last month. It got a positive month for the month of July, up 0.78% in what was an inside month, and a very serious inside month of extreme low volatility. Low volatility going back to here. Okay, question is it an up month? Well, technically, nominally it was. But what's the real inflation for a month? Is it higher or lower than 0.78%? I define as inflation as increase in the currency supply. Rising prices are merely a symptom of inflation. Okay, so I'll let you decide that again. Looking at this 18 average here, bull market, obviously you can see how in this situation, this is where it turned from bullish into bearish. Now, at some point, you'd have your first test of this 18 average band. When it did have its first test, it's merely got above it. Well, it's going to have its first test in here as well at some point. Now, there's a lot of similar comparisons. You come to the 18 or the lower band. The differences are the speed from here to here was faster than it was back in here. This was a lot longer. In fact, if you would have asked me in here, is $20 possible? I would have said yeah. In fact, 26 is key support. That breaking below that, the next key level would probably be a fast move to the high, low, or the low 20s, or the 20 whatever, or the high teens, and do it relatively fast. And that would be the area where I would expect it to bottom. Well, it took a lot longer. Did it have a fast move down here? Check mark. Was this the bottom, or is this going to be the bottom? Right now it's a question mark, but it could be a check mark because it's definitely in that significant area, to say the least. Let's let's draw a box to show. This is the move from the high to where the low is. We'll match it up in here. So this move here, the percentage loss a little bit higher. It's down 60% right now from this high. Has the currency supply lost 60% of its value? That's like gaining 150%. Maybe the supply of silver is like doubled or tripled in that time. Or maybe it hasn't. I'll let you decide that again, or research it if you need to know. Okay. Also looking at this 18 average band, it's pretty much a lot of possible comparisons. I wouldn't be surprised if, of course, it rhymes with what happened before, and of course the bull market comes into play. If you were to ask me back here, okay, so we're going to fast forward to late 2013, what do you expect to happen? And I would say that the currency would probably collapse or be in the process of doing such. Okay, that's wrong. Am I going to make the same prediction for 2.5, 3 years from now? You asked me 2016, summer 2016. What's going to happen with the currency? Okay, it'll be collapsed, or it'll be in the process of collapsing. And technical analysis is merely showing what has happened and what would be the most likely event in a collapsing currency for silver to do. Stay sideways, go lower, or go higher. Something that you'll have to answer yourself again. Now, I could be wrong, or I could be completely wrong about this currency collapsing thing, for I have found one risk for it not to do such. And that is the masses don't care, don't have enough courage, or are just not smart enough to be able to figure it out. But you know what? I don't expect that. I really still don't, but we'll see. We're going to finish this off with an indicator that I've been using for many months now. And what it is it takes multiple moving averages from very short term to fairly long term, and it determines this using a scale of negative and positive numbers. Below the zero line is oversold conditions or times in bull markets where you'd want to be buying, definitely not selling, which tells you that's buying now. But interesting how this chart is playing out now, and I just want to draw this line here. Bit below negative 0.4. Also, we could draw some support in here, but don't be surprised if maybe this comes into play later on. If, of course, it's a downtrend, but just maybe there is some magic, or the numerology is going to work out, and a key break of this level could be what sparks this into a bull market, but it really has to get well above zero for this, whatever. However, definitely a key level. In order for this to get positive right now, for it to be 7 p.m. Eastern time tonight, and this to be here, the price would have to get past 23.50. It takes a decent amount for this to leave the oversold conditions. But I want to now show this chart going back about 8 years on a more longer term time frame. This will take us from September the 14th to now, of 2005, of course. Again, above this blue zero line is when prices are bullish, maybe overbought, times where you may not want to buy, or higher you might want to sell, and of course below you want to buy. Now what we can see here is times below the zero line. Every time below here was usually just brief periods, but 2008 was a little bit different. Very volatile, we can see in these periods just like this candle here, back above zero, but then falling down to the -2 level. Here you have a little bit of negative. That's about it. So what do we see now from this top? Well, the original move from 50 to 32, or 50 to 32, brought us just back down to here. The move in 2011 that brought us down to 26 was a similar velocity as this. The only difference is it recaptured the zero line quickly. Now this has been a long period staying in negative territory, something that it's not used to. Now when you look at something like this and just try to make this as simple as possible, let's first take a look at this 0.4 line that we were showing on the previous chart. And you ask yourself, does this have any history of being big level? Okay, maybe. Or definitely, depending how you want to look at it. But just keeping it simple again, when you look at this, if you want to buy silver and you want to get the best prices, well, simply, pretty much once you're in this range, it's a buying time, because that's where prices are usually very low, and they go up from that point. Where would you sell? Well, you're not selling now, that's for sure. Okay, well, let's find key resistance. Let's draw another box again. If you want to sell, this is the box in which you would sell. We're not there yet, but I'm going to end the video on this side note. So thank you for tuning in to today's video, and have yourself a great week. Bye-bye.